There are new fears of a recession after that miserable start to the week on Wall Street. The S&P 500 tumbling into a bear market. Naomi Ruckham explains what this means for investors and really all Americans.
A bitter day on Wall Street has Americans worrying about their retirement funds, along with everyday expenses.
We're confined. We're just being like kept prisoners in our own little spaces because we can't afford to do anything.
Stocks plunged Monday across the board over concerns about inflation and higher interest rates. The S&P 500 dropped 151 points, down more than 20% from January highs, firmly landing in the claws of a bear market for the first time since the start of the pandemic.
I think there was this fear that, in fact, higher prices and rising interest rates are going to keep eating into corporate profits, and the consumers are not going to be able to maintain their current level of spending.
Tech companies like Amazon and Apple pulled the Nasdaq into deeper declines. The crypto market crashed too, wiping out billions of dollars. Investors are closely watching the Federal Reserve, which is meeting this week to discuss raising interest rates at least half a percentage point.
The problem is that the Fed was late with fighting inflation, and now they're kind of scrambling.
For those anxious about their 401ks, experts say riding out a downturn may prove a stronger strategy than selling off.
You shouldn't just blow out of your stock positions just because what's happening today or tomorrow, even in 6 months. Most people who are investors are investing for the long term.
But be patient. Bear markets can take 2 years or longer to break even. Naomi Ruckham, CBS News.
Now, the Federal Reserve ends its meeting tomorrow when Chairman Jerome Powell will make a presentation and take questions. Some economists are speculating that the Fed may raise rates by 0.75%, something that has not happened since 1994.